Bring in Mark Mahaney, head of internet research at Evercore ISI. Mark, what does this Manus acquisition tell you about Meta's AI strategy?
Well, I think McKinsey nailed it. This company is sort of pivoting or extending to get even more aggressive in AI, and this has been pretty part of the course for Zuckerberg. He's highlighted AI, he's deployed AI aggressively. He's already used it over the last 2 to 3 years to materially improve his ad platform and his user platform, and it showed up in the metrics and, more importantly, in the financials. But he's leaning into it even more aggressively now, and we're all chasing, or Meta is chasing a super intelligence product cycle. And I think that's what investors are waiting to see, what comes out of that and how expensive it's going to be. But, he's doubling down, tripling down with this most recent acquisition, although $2 billion is pretty small. And I love the data point you just threw out that, you've already got a return on that 6x in the space of a couple of trading hours. That's a pretty good trick to pull off.
Okay, so, a small investment like that might be chump change. You're talking about Google, Microsoft, Meta, and Amazon increasing their CapEx from $350 billion this year to $450 billion next year. There has been some concern on the part of investors about the amount of debt that's available, when they're going to get a return on this investment. Give us your sense of how fast is still good business.
Well, I think we have seen what I call rising ROAI, ROI, return on investment, ROAI, return on AI. You've seen that in kind of one of the simplest metrics one can track, which is revenue per employee. It's really inflected up the last 3 years at all of the hyperscalers. There's a lot of things that go into that, but I'm almost certain that one of those is just greater efficiency, both in terms of product development, revenue generation, and in terms of managing costs because of AI. So I think you've had good proof points on the returns you can get on AI so far. But this CapEx spending is, these companies are clearly leaning in, and it's going to cause some free cash flow challenges for some of these names. At the top of that list is probably Meta. I don't think Amazon, but plausibly, I don't think Google or Microsoft have any issues there. And they've got tons. The balance sheets are great, so there's not an issue there. It just highlights just how extensive the investment cycle is. I think the challenge, just getting back to the product on Meta, is you've got, and you didn't mention OpenAI. They've got you got 4 or 5 companies that are all vying for the frontier, having the leading frontier LLM and frontier model, and they've all got a good shot at it. And I think the market sort of views Meta as kind of the last in the race, and that's a correct perception unless Meta can change that sentiment and really show us some great product coming out in the first quarter with avocado. So that's kind of what the market's waiting for. We've seen that at least they're willing to cut expenses in other places. That's what caused the stock to lift up from 600. Now we want to see the product cycle.